Uncertainty is what kills markets. No one wants to lose money, and big banks want to be the first ones to make those gains. But that also means they are the first ones to get out with a hint of trouble. And now the US has hit its debt ceiling. So let's go ahead and take a look at what that could mean for us. First, a quick look at the cryptocurrency market cap. You can see we've decreased the market cap by 2.7%. We're down to 964 billion. Bitcoin on the 24 hours down 2%. We're down to 14% for the 7-day. Ethereum's down 3.5%. We're sitting at 1522. Bitcoin sitting at 20,700. BNB's back under 300 at 290. Cardano sitting at 33 cents. It's down 4.69%. We thought things would drop a little bit, accumulate before we see another drive up to see if we can't break all-time highs. But again, uncertainty is what kills markets. And as long as the market's uncertain, retail investors are uncertain, big banks are uncertain, they're not putting money into the market. They're withdrawing. They're holding until they know for sure what the government's going to do, what the Fed's going to do before they allocate those funds, because they don't want to lose money. Right? Smart money doesn't lose money. Polygon is under 93 cents. US has reached its debt limit. What comes next is predictable. A debt ceiling means the government can't take on new debt to pay the interest on its existing debt. Yes, you read that right. They can't open a new credit card to pay off their old one. Current debt is over $31.4 trillion. You can see we passed the 10 trillion mark in 2010. And in another 12 years, we've tripled that. That's outrageous. This is going parabolic. This is what you would invest in to make money. Since they can't borrow more money, the government will be taking money out of the civil service and postal workers' retirement and healthcare funds. Yeah, you read that right. They're going to be taking your money. If you work for the government, they're going to be trying to take your money. They will take money from employee retirement funds and pay it back if they raise the debt limit. But they're only going to pay it back if they raise the debt limit, because they don't have the money to pay it back unless we print more. Treasury warned it would take extraordinary measures because of the debt limit. Here's what that means. This is only going to hold off the government for so long before they completely run out of cash and default on their payments. Now, I think the Fed will step in before we default on payments. I think J. Powell might have to turn the money printer back on, so to speak. I think that we might stop our quantitative tightening because that's hurting treasuries. Why would you invest in a treasury if you can give your money overnight to the bank or the Fed and earn a 5% interest instead of buying treasuries? And so I think that's what we're seeing kind of happen is the government's running out of money and they're not making any more money from treasuries because people aren't buying treasuries. And now you have the Fed not re-upping on their treasuries, and then banks are starting to use the Fed's overnight lending for more or for a higher percentage interest rate. Bank of America just posted a 1.1 billion provisional credit loss. JP Morgan was 2.3 billion. It's a huge sign. This is a very bad sign for the economy in 2023. So with all this news coming out, are we going to go back? Is this a sign of a recession? Or are we going to turn on the money printers and we're going to see a huge drive up in price? Because what happens with assets when you print more money is that money has to go somewhere. Now, as always, this isn't financial advice. This is just my opinions, and we're reading the news. And again, markets don't like uncertainty. Big banks don't like uncertainty. They want to know that they're going to make money, and they're not going to put in their money if they think there is any sign of trouble, which there is. We're hitting that debt ceiling. So what is the Fed going to do? What's the government going to do? Are they going to stay hawkish, or are they going to turn back on the money printer? And that's the big question that you have to ask yourself. What's going to happen? Now, again, if you have a long-term outlook on cryptocurrencies or the market, start dollar cost average again. There's nothing wrong with starting to allocate money, right? Bitcoin's 20,000. If you think it's going to hit 100, that's still a 5x. Okay, so if you've enjoyed this video, give it a like. If you're enjoying my channel, go ahead and subscribe. Like I said, you're the CEO of your own portfolio. You need to make informed decisions when it comes to your money. Thank you.